Good afternoon. In this video, we're going over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of my video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, this past week, I did not do very well. I just took too many losses. I finished the week with 7 wins, 5 losses for a win rate of 58.33%, which is probably one of the worst weeks I've had. The market has just been very crazy, and it's been tough to trade, especially the first hour. It's been really tough because of just to chop around, just to fake out in traps. It feels like it's getting worse and worse and worse. But it's just the market just basically not really doing anything, waiting for rate cuts, which we ain't probably not going to get. Everyone and their mother thinks we're going to get one, so I don't think we're going to get one. So, but I could be wrong. I mean, who really knows? But that said, I'm going to get right into the trade ideas. Are from Monday the 8th. Let's see, Monday the 8th, I said SPY calls over 649, which is right up here. This is the first 2-minute candle, and first play I took was, I usually like to wait out the first half an hour or so. And lately this whole week is just pretty much buy the dip. And the problem with me buying the dip is every time you think it's gonna find support, it just flushes through more. So my timing has been horrendous this past week. Not a very good buy the dip trader because SPY, it likes to flush through support areas and take out stops, and you sit there and you wait for these stop hunts to happen. They never happen. You get these straight up days, you wait for an entry and you just never get one. And when you get these up and down days, you just can't get the right area to grab. So I mean, I feel like it's kind of hard to deal with. So but anyways, the first trade I took calls at 956, which is right here, right when it broke above this 649 area. I think I grabbed it a little too early. I grabbed the 6505 calls at 570, and I ended up but averaging down when it flushed to a new lower day. I ended up adding more at $3, make my new average 435. And then it finally ripped. So yeah, got lucky. I mean, to me, the past few weeks has just been buy the dip. I mean, we haven't had hardly any red days at all. I mean, look at the daily. I mean, we've only had few red days the last 2 weeks, and even the red days have been pretty much tail candles. So they've been buying the dip on the red days too. So so yeah, I just got in at the wrong time. Got in thinking we were going to break high day. It dipped down. Instead of stopping out, I added and ended up being a good play. Then I bought the dip at 1145 right here when it came down to VWAP. I got the 6,500 calls at 750. I think I got it up here right around the 649 area. And when it flushed through VWAP, I added more. And 649 looked like a pretty good area because it was resistance up here, and now it looks like support. So that's why I was grabbing it in here. And of course, the same thing, it just flushed through, and VWAP trapping people, and then I wasn't going to stop out. I mean, to me, it felt like if you had calls, that it was better just to average down. I mean, I know it's not the best scenario, but you get in, they stop you out, and it goes the direction you anticipated it going, and it ends up working out. And SPY just been doing that a lot lately. It's been annoying as hell. So yeah, I averaged down at 5, make my new average 625, and then went from 625 to $9 in that push right there. So ended up working out. Then it dropped more, and I didn't do anything until 301, which is right over 301 right here. Not quite sure why I grabbed calls right here at 301. I honestly don't know why I did that. Oh, if I grabbed it over here on this green candle or above 648, I get that. But why I grabbed it here? The only thing I can think of is I was anticipating it to bounce above 648, which was should not have done that. I mean, putting in lower highs and VWAP's acting as resistance right here, which is this white dash line, and it I should have waited, and right here would have been the best area to grab it. I'm quite sure why I grabbed it here, but I did grab the 64.90 calls at 445. It dipped down, then it rocketed, and they ended up going from 450 to 640 on that push. So it did work out. To me, it's very risky playing like this. I don't like playing like this. I mean, the market is changing. The market's evolving. It's not the same as it was last year or a couple of years ago. And a lot has to do with 0 days to expiration being daily for a lot of these plays like SPY and SPX, and I think QQQ is daily too. I'm not 100% sure. I don't trade QQQ. I think it is, but anyways, it's not just that, because we've had 0 days to expiration on at least SPX and SPY for at least a couple of years. So that is nothing new, but the volume and the amount of volume that's coming in is pretty much breaking the market. We've been watching the volume the last, I don't know, 6 months or so, and we were lucky to get a strike with 100,000 total volume, not open interest, total volume. We were lucky to see one strike with 100K, and now we're seeing 4 or 5, even 6 of them, and now we're starting to see 200K. So the volume has just exploded on these 0 days to expiration, and it kind of reminds me of the GME GameStop, where retail traders just put the screws to the hedge funds and just went after the big fish. It kind of feels like that we have more retail traders pushing the market than we actually have institutions and hedge funds. So I mean, I could be just spinning a yarn, I don't know, but this is my take. I think the volume has exploded. I think we have a lot more retail that's pushing it, and it's kind of reminding me of the GameStop versus hedge funds. So the market's just got so much volume. There's more ETFs than there is stocks, and yeah, everything's broken. So I mean, just you have to learn to adapt to what is happening and deal with it. Now on to Tuesday the 9th. I said SPY puts on the 648.50, which is over 648.50 down here. For some reason I picked way down here. Not quite sure, but I did. Oh, it might have been off this low right here. And I grabbed puts at 954 right here on this candle. As soon as it broke lower day, I grabbed the 64.85 puts at $6, and it bounced. And this is the kind of bullshit that's been happening. I mean, look at it Monday. I mean, this is a typical Monday. We anticipate Mondays to be like this because you got 3 days worth of news, Friday afternoon, Saturday and Sunday, and when anything happens Monday morning, it's got a weekend worth of news to digest and to mess with on open on Monday. So you anticipate that. It's been happening. This is almost every day now. And yeah, it makes new lower day pops. I stop out. Then I take calls at 10:17, which is right with 10:17 up here. Yeah. Oh yeah, I remember this. I took puts down here, and it popped. So I was thinking, okay, we're gonna break high day, and I got the 65.05 calls at $6. It popped and it slammed, and I took 2 losses, and I had enough. I am not dealing with that anymore. So not a very good day, not a very good week, but I just took 2 losses, and it's same with Wednesday pre-market. I said in trader's room, I said SPY puts on the 652.50, which is down 62.50 right down here. Pop up from the news. I think that was CPI or PPI. One of the inflation numbers popped, and the inflation came down, which usually means that we're not going to get. No, that was the job numbers. Okay, ignore what I just said. My brain is all over the place today. My brain is just got so much going on. I can't think straight. But anyways, just ignore what I just said. But anyways, news popped. The SPY popped on the news, and I looked at puts at 9:51. I think this is the day I was thinking the market was going to realize that the news was not that good, and it just diminished the odds of a rate cut. And I was wrong. Well, I was right, but I was wrong. It did finally react to it here, but yeah, I bought puts right here. I bought the 65.25 puts at 550, added at 10, which was right in this candle for some reason. Yeah, I added when it popped up here. Yeah, so I bought puts down here. When it came up to high day, I added, so my new average was 425. Then when it popped, I stopped out. And what did it do? It dumped. Thinking, this is not a good thing for rates. Rates, if you want a rate cut, we need to. The data just didn't support it, so and it just did dumped. Then it took calls at 12.23, which is right here when it broke 12.23 right here. When it made down to near lower day, I got to 65.35 calls, thinking that we were going to stay within range or at least try to. And I got the 65.35 calls at $8. It dropped a little bit, made new lower day. So I was thinking, okay, this is going to be a stop hunt. So I averaged down. It's got it more at 6. Average was 7. Then it popped, and they went from 7 to 12. So that ended up being really good. And then I took calls again at 124, which was right here, right when it broke new lower day again, thinking it was another stop hunt and that we were going to bounce. And I had the 65.35 calls at $6, dropped again. I added, making my new average 550, and I ended up stopping it. So I just played this totally wrong. I was making lower highs. I actually thought from when we made this stop hunt right here, we knew lower day here, we got the view up, I actually thought we were going to go back up to higher day because it didn't seem like it cared about what was going on. And I should not have taken this play, so I should not have taken calls. In fact, puts are not even nothing. But it's always easy to see things after the fact, and I really can't stand when people put up their charts and just show trades after it's already done. Yeah, big deal. Show it real time. Do it ahead of time, because when you show your chart after you see these charts after moves are all done. You see them all the time on Twitter and everywhere. People post, it showed this, you should have done that. Well, then why didn't you do it? Why didn't you play it that way? But they don't. They just post their chart to make it seem like they're smart, but they don't play it in real time. So making decisions in real time can be tough. And so I'm not a fan of people that post charts after the fact to show you moves. So I'm not a fan of that. I don't like it. But anyways, yeah, I mean, after looking at this day, there was a hidden divergence on this candle after VWAP. I mean, I should have played puts right there and not calls. So, but like I said, seeing it after the fact is easier than in real time. Real time, you just have to split decision choices to make. So yeah, 2 losses and 1 win. So I'm not doing very well at all. And this is one thing I'm talking about, the day where you buy the dip and you don't know where it's gonna bounce. I mean, up here it seems so crazy to buy dips up here versus on Monday when they were going back near lower day or stuff like that. I mean, kind of crazy. So yeah, it's just trading has been really crazy. This is September 11th. Yeah, this day, I wanted to go into this day and just blindly buy calls, but we didn't really dip hardly at all. We just dropped a little bit and then we just went, because usually on September 11th and 4th of July, 95% of the time it's going to be a strong green day because they don't want the U.S. to look weak. And having a red day on 9/11 and a red day on the 4th of July is really not a good look for the market on USA, and they don't want to look weak. So it was going to be a strong green day. We knew that going into it. We talked about it ahead of time, and I was actually waiting for because we had a red candle right here, and I was thinking we were going to drop a little bit more, and I was going to get in, but it rocketed right away, and I wasn't chasing this, so I waited and waited. So, in fact, I didn't even put out a traded as pre-market play on Thursday, but yeah, that was pretty much the play. Was grab calls right at open. I should have done that, but I didn't do that. But I did take calls. I took it at 11:47, which was right here, because it pulled back. I mean, we got an FU setup right here. This would have been a good FU setup right here. Strong green candles, red candle, boom. I probably should have played that, but I didn't. It just kept going and going and going, and pulled back a little bit here. Made a little bit of a bear flag. It didn't really pull back that much. I mean, it pulled back a little bit here, and it got bought quickly, and I just didn't feel comfortable buying this dip. I didn't think we were going to we're getting too far away from the moving averages. And whenever we get too far away from the moving averages, one of two things has to happen. Either we chop to bring the moving averages up, or we go back to them and retest them. And in this case, they chopped and brought it up. But right here, when it made new high a day right here and came back down and tested this area right here at the 650, 660-ish area, that's when I grabbed calls. I grabbed the 65.80 calls at 630. And then went from 630 to $11. So that ended up being a good play. Then it just chopped around, and I was not touching it anymore. After it failed to break high a day and it was just chopping around, to me it just seemed like it was just no win. It was not going to go anywhere. So yeah, then I took the trade ideas room on the 12th. I said SPY puts on the 657, which is right here. Wasn't really much action for Friday. Okay, why can't I? There we go. Friday, I took, let's see, I took 65.90 calls at 11:06, which is right here. 11:06. I took a loss on this day. Which one was it? Okay, 11. It must have been the last play. I didn't. Yeah, the last play. Oh yeah, I remember that. Yeah, right here, right when it broke high day, right here. 65.95 calls at $6, and I didn't put how much they went to. If I had to guess, I probably went to $8 on that right there, from 6 to 8 on that new high a day. Then I took puts at 11:47, which is right here. 11:47, right here, right when it broke below 657.50-ish. I took the 65.80 puts at $5, and they didn't really go that far. They probably only went $1.50 if I had to guess right there. And we didn't break new low a day, but I was thinking right here, because of got the bodies of these two candles in the bottom of this candle right here, that would have been a good area. Because if you wait for low a day, what we'll do is it will tag it and quickly bounce, and you wouldn't be able to get in and out if you're even quick. So I try to look for areas before the pre-market, before lower day, in case it comes in early. And that's another thing I want to point out too, is that another thing that's been changing is that you need to put up the pre-market high and low of the day every morning, because it's been respecting those the most out of anything in the last couple of weeks. If SPY is trading within the pre-market high and low, it usually likes to test the high, then the low. Well, vice versa. It usually likes to test the high and the low. But if it pushes above higher day, above pre-market high, and stays above it, it will likely come back and test the top of it and bounce. This green line is not pre-market high. This is previous high a day. I have it on TradingView. I have it on a different chart. And I've added it, and it really respects the pre-market lows and highs very, very well. You should put them on your chart. I didn't want to put them on this chart because if I did, I'd get confused on which is pre-market and which is previous day's high or low. So I kept them separate. I'm so used to seeing previous days high and low on my toss chart, so I put up pre-market high and low on my trading view. So I keep it separated and I don't get confused because that will happen. And they used to respect the previous higher day really, really well, but lately it's pre-market. So put them on your chart. It's worth having. Now, the last play I took was the loss. I took calls at 335, 325, which is right up here. I think I took it up here, right around the 658. I took it to 65.90 calls at 530. I averaged down at $1, thinking we're going to have an end of the day pop. And we did. And it just didn't work out. So, yeah, it's just been a tough week. So it is what it is. And just all you can do is when you have a bad week is minimize your losses, make mental notes of what you did wrong, adjust and adapt. The market's changing. We have a big week this week coming up with FOMC, and that may be the reason why the market's acting very weird is because of doesn't know what to do. So it's just waiting and trapping. So that's going to do it for the recap, and thanks for watching.